Traders, hope you're having a good weekend. So this is going to be another market outlook trading video where I show you the key levels to focus on as well as the trading bias for the new trading week ahead. Now this week has been a very difficult week to trade, and if you are a part of our Telegram channel, then you know that we send out many trades and many trades will close at a small profit or just at break even. Now we are in a new week, and next week is looking a little better than this week. So hopefully with our levels, you'll be able to make some good money. So as always, I'll be running through the currency pairs over here just to give you the key levels, and I'll be using the MPE trading strategy. If you are new to the channel, let's say you are a Telegram subscriber, you join us over here and you have not yet subscribed to the channel, please make sure you do that. Okay, so please make sure you get our free day trading guide right here. Just check out the link in the description, click this, and it will come to this website where you will get the free day trading guide. Okay, because we'll be using this to analyze the market, and it's important that you understand how we actually apply the MPE trading strategy that is right over here. Now, if you are a YouTube subscriber and you haven't joined us on Telegram, please do that as well. The link is in the description. It's free, so just join us there so that you have access to the trades that we are looking at, as well as what currency pairs to focus on when the market is open. So just a very quick refresher. If you're new, MP stands for market condition, price level, and entry. Okay, so we will be using this. I will show you how to do it, how to execute this using the charts just in a moment's time. For now, let's start off by looking at the Forex factory economic calendar. This is the first thing that we always do. We want to know what to expect going into the week ahead. So as of the time of recording right now, it's 2nd of May, and we are preparing for the 3rd of May to the 7th of May. Okay, it's a new trading month. So next week, you see that there's a lot of economic news data. Okay, you have a lot of this pound, then you also have the NFP. So with that being said, we don't expect it to be a very smooth trading week. Okay, it's not going to be a trending week. Okay, but this week is still potentially easier to trade than this current week that has just passed. So this week that we are in right now, because today is Sunday, so technically the week hasn't ended. The week that we have just traded, it's very difficult because there's a lot of conferences which I actually warned you about in the previous market outlook video. But for this week, we have only this right here, okay, just for the pound and NFP. So these are the two main things you want to pay attention to. Kiwi, I won't really pay much attention to except the unemployment rate and this one right here. Okay, so with that being said, please lean towards more of a range trading setup. Right, look for fake outs. Do not trade expecting that price will explode, in a single direction because of all this kind of news event. So let's move into the charts. As always, I'll start off with the dollar index. So remember, we're using the MPE trading strategy, which deals with market condition, price level, and then the entry. So right here we have DXY, which is dollar index, and if you look at the market condition, I would say that it's actually more bearish than bullish. Okay, let me just explain to you why. So you have a high here, you have a low, okay, you have a higher high, and of course you have a higher low right here and then higher high. But look what happened right here. You can see that price actually broke down and violated this higher low. Okay, so in that sense, I would say that we are more of in a bearish environment than a bullish one. However, trading is not always so straightforward because right here you have a trend line as well. So price is finding support here, and there's a level of resistance right here, which is given by this level, which is the swing low. So on Friday, price just bumped up into this resistance level, and it has not broken this level yet. So even though the bias is bearish, we haven't seen any setup right here. So one setup that you could look for next week would be to look for a price action right here. Maybe it could be a shooting star, or a bearish engulfing, and then you short it down. Okay, that's one potential setup. The other would probably be you break above, then you look for the retest. Okay, again, this is more advanced because it goes against the MPE trading strategy in the sense that the environment is more bearish and you're going long. So if you are new to trading or you are new to the MPE trading strategy, I advise you to stick to the short and just look for a setup here. Okay, so remember, it's always the same 3 steps: market condition, bearish, price level I've already given you, and lastly what you need is an entry trigger. Okay, an entry trigger could be a bearish engulfing shooting star hammer, which we do not yet have at this level. Okay, so just watch out for. Anyway, most of you will not be trading the DXY. Personally, I also do not trade in the DXY. So what will happen is that if we see a bearish engulfing here, then we'll probably look into euro dollar, pound dollar, and we go long. Because if DXY is dropping, that means dollar is weakening, and that means we want to go long currency pairs like euro dollar, pound dollar, and Aussie dollar, and so on. So these are the key levels. Just take note. Now let's move on to euro dollar. Now euro dollar was pretty nasty last week because it slowly pushed up, and then on Friday this one bar wiped out almost the entire week's movement, right? This is Friday, this is Thursday, Wednesday, Tuesday, Monday. So this one bar right here wiped out the entire movement for the entire week. So this is why last week was very difficult, right? Or rather this week, because the week hasn't ended, it's very difficult because if you went long, your entire week's gain would have just been erased by this one bar. So this is why we were very cautious. Now, this is obviously a key level. Okay, but let's talk about the market condition first. So market condition, depending on how you see it, if you were to switch to the line chart, which we always teach, you can see that this is a swing high, this is a swing low, this is a high, this is a low, and price seems to have violated this. But this is a very minor swing low because you can see that it's not that significant. So depending on how you see it, you could say that, okay, this is still the swing low, it hasn't been violated, and therefore I want to go long. Okay, this is fine. But if you see this, you see this as a swing low that has already been violated, then your market condition is no longer bullish. So what I'm trying to say right now is that it's not that clear. The market is not super clear. So I cannot really tell you that the market condition is flat out bullish or bearish. Okay, I would say it's rather mixed. But what I want to do is I want to show you the key levels to focus on. So you have this level here, which is definitely a key level because you can see this spike low. Price retested it, and then price acted at resistance here, and then after that is support. So price is very near support right now. Okay, if you want to buy, you buy near support, that's fine. Okay, but please do not start selling into support right now. Okay, so I will not give you a bias for this. I just want to point out the key levels, and of course, if this level is broken, then you have this level here, which was the previous kind of like a inverted head and shoulder. So left shoulder, right shoulder, and something like this right here. Okay, so this will be the next important level. Just take note. Now let's go into pound dollar. Pound dollar, last week I talked about this. I advise you not to trade pound dollar if you're using the MPE trading strategy because it's a total mess. Okay, and not much has changed for pound dollar, but it's still stuck. In fact, the levels that we pointed out has all been holding very well. So I pointed out this level right here, which is actually a kind of like a inverted head and shoulder. This is the left shoulder, this is the head, and this is the right shoulder. Okay, and that's why on Friday it just went straight into this level, and it's just hovering right here. Okay, there's no conclusion right now. We do not know if this level will hold or it will not hold. Again, it's very hard for me to tell you the market condition because it's more of a ranging scenario. Okay, it could be bearish, it could be bullish, depending on how you sit. So I will not give you a trading bias for this, but the key levels are already provided. This level right here, it's this left shoulder, and this level right here is actually the swing high here, which a lot of people shorted somewhere here and they put their stop loss above. And that is why price had to pump up to whip out all the stop losses, and then it starts going back down. Okay, this level right here is also very easy to find because it's just very obvious resistance, and of course you have the lower end of the support being over here. So just take note, this is not a currency pair that I recommend trading. And remember, we have the pound going news going on Thursday. So what is likely to happen will be price will just consolidate here and here and here, and once the news comes out, then it will just break out either way. Okay, that's what I expect price to do. Just be very patient with this pound dollar pair. I don't recommend trading it. Now let's go into dollar franc. Dollar franc is much clearer because last week I said that this is a bearish trade, or rather a bearish market condition. Why? Because this was a high, this is a low, this is a high, and this swing low has been violated. And if you look at this entire movement here, you switch over to the line chart and you can see a series of lower lows and lower highs. Okay, very clear. This is the kind of setup that I recommend trading because it's much clearer. Now, one thing to note is that we are in the middle of nowhere now. Okay, I prefer for price to just retrace higher into this zone. Okay, this is entire zone of resistance. This is something that I talked about in the last market outlook video. So it's still the same thing, right? We are still waiting for a good price level up here. Wait for a bearish price action candlestick right here, and then we take a shot down into this level here, which is the swing high here, and you can see that this is a very strong support. Okay, the trading plan hasn't changed for this. You just need to be patient. Okay, again, this follows the MPE trading strategy. Market condition is bearish. I have the price level right here, or rather a price zone. Okay, this one is an entire zone, and then what we just need is patience. Okay, we need patience to wait for price to retrace here with a bearish candlestick pattern, which I talked about in the 3-day trading guide right here. Okay, now let's go into Aussie dollar. Aussie dollar, it's ranging. It's very obvious that it's ranging right here. It's ranging between this swing low and this swing high right here. So it's a range bound market condition. Now, I don't recommend trading this because the range is quite tight. And let's say even if you get a trade set up, something like let me see if I can draw it for you. Something like this, you see on this date, you could have potentially trade something like this. This is kind of like a piercing pattern. You can see that if you entered upon confirmation of the candle, the risk to reward is pretty bad. 1:1.04. It's not fantastic, and that's why I find that this range is a bit tight, right? Unless you can get in a nice pin bar right here with a very nice stop loss of perhaps something like maybe like that. If you can get in with something like that, then this might make sense. But it is highly likely that when you see a bearish candlestick pattern right here, you probably will get in at quite a high price, something like this. Okay, just like what I've shown you, and the risk to reward just doesn't make sense. So just take note of these two levels. Again, the bias for this, it's more of a range bound. It's not a clear bullish or bearish, so I do not want to tell you to buy or sell, but I just want to highlight to you the key levels, this one and this one. Now, one more thing to take note is that this level, this is very important. Please listen closely. Because what happens is that many of you will see this as a support level because this is an important level and it's an obvious level. And what happens is that maybe price starts breaking down and you say, hey, look, this level is broken, I want to take a short, and you short somewhere here, but you do not realize that there's a support right here as well. This is an intermediate support level. So what happens is that price might just do this, okay, and then you get stopped out and you lose money. So please be very careful of that. There's this level right here. This is also a strong level because this is an inverted head and shoulders. Let me show it to you. This is the left shoulder, this is the head, and this is the right shoulder. So just be very careful. This is the neckline that was previously broken, hasn't been retested, so price might do this. So please do not chase the breakout and start shorting here and expect price to come here. Okay, just be very careful with this. Again, I advise you not to trade this, but if you really want to trade, then just take note of these key levels. Now let's talk about Kiwi dollar. Kiwi dollar is another trade which we talk about the levels. The levels are still holding. Previously, we talked about this level here. This level is still holding. This is a swing high. So you can see that last week, or rather this week, on Thursday and Wednesday is this candle and Thursday is this candle. Price failed to break above. Okay, so let me just clear this so that it's clearer for you. Okay, let me clear this. Okay, so this one, the market structure, I would say that it's more bullish, okay, because if you change to the line chart, you can see that this entire movement up, there's a series of high highs and higher lows. But again, this is like the euro dollar. Depending on whether you classify all this, this cluster here as a swing high and swing low, your conclusion will be different. Okay, but one thing to note is that this is a very clear inverted head and shoulders pattern. This is the left shoulder, This is the head and this is the potential right shoulder. And if you were to look right here, you can see that this level is strong, this level is strong, and here was acting as resistance and resistance. So this is definitely a very strong level, okay? So the bias is not exactly bullish, okay, but this is a very strong level, and this is a level that I personally will be very interested in buying. So I might look for a setup, something like this, right? Look for a engulfing pattern here, and then I take the long and just target and take profit here. Okay, this is how I would trade it. Okay, it's not exactly textbook as per the MP trading strategy, because the market condition right here is a little subjective. But just take note of these three levels. Now, of course, if this level is broken, then you have the recent swing low right here that could be the next possible target. Okay, let's move on to dollar CAD. Dollar CAD is the obvious trade. This is the kind of trade that I like to stick to. Last week, I believe, or this week, I think we have the CAD BOC, I believe. Do we have the BOC? Okay, yes, we have this BOC, and that's why price started moving. Okay, price broke down. After consolidating so long, it finally broke down. Okay, so this is a clear bearish trend. Okay, if you tell me that this is a bullish trend, then I think you really need to read the 3-day trading guide. Okay, you really need to brush up on your fundamentals, such as how to identify trend, because this is a very clear downtrend. It's a low, it's a high, lower low, lower high, lower low, lower high, lower low. Okay, there's no way that this is a bullish trend, and therefore you should only be selling. You shouldn't be thinking about buying. So market condition is bearish. Now let's talk about where to sell. We need a price level to sell. We don't just sell because the price is bearish. So right here is obviously the good level. If you understand supply and demand, which I believe I recorded a video about this is actually a supply zone as well. It's kind of like a drop base drop. Okay, that's a bit more advanced. I won't cover that in this video, but the point is that this is a strong level, and if you look back, this is a swing low. Okay, so what you want to do is you just want to wait for price to retrace up, look for a candlestick pattern, and then you take the short down. Okay, right now you are very close to support, so please do not chase the trade. Now let me show you how I got this level and this level next. This level is just here, nothing special. You can see that this was a swing low, and this level is this swing low right here. Okay, this is a very straightforward trade. So if we can get a short right here, then our targets will be this level and this level. Okay, a lot of space, a lot of profit to be made if price retrace to this nice level right here. Now let's move on to dollar yen. Dollar yen a bit tricky as well, because you could say that this is in a bearish trend. Okay, because if you look at the line chart, you can say that this is the high, this is a low, this is a lower high and lower low, and price has not violated this high right here. Okay, so what happens is that price is going down, it's retracing up, and more importantly, you have a left shoulder, you have a head, and you have a right shoulder. Okay, but one thing to note is that the bigger picture, the bigger trend, it's a very clear uptrend. Okay, you have a high, you have a low, higher high, high low, high high, high low, higher high, high low, higher high. So it's a very clear uptrend, but right now it seems like you are at resistance. Okay, so this is where having the experience to trade really counts, and this is also why it's very good for you to watch this kind of market outlook video, because I share with you the exact thought process. I show you how to approach a market with my experience. Okay, it's not just textbook, because this is just content, this is just theory, but this is where it takes experience to discern whether you should be selling or should be buying. Okay, my personal take on this market outlook, or rather this market condition, is that I rather wait for price to go up and do something like this, and do something like an inverted head and shoulder pattern, left shoulder, head, and a potential right shoulder here with a confluence with the previous left shoulder here and this left shoulder. Okay, that's the way I would prefer to trade it. And if you look at the momentum up here, this is quite a strong buying momentum, so that's how I would trade it. Okay, but if you want to look for a short here, a bearish price action here, it's not wrong as well. Okay, it's just a personal preference. Personally, I just want to wait for this instead. Okay, let's move on to gold, and then I'll end off the last two currency pairs. Now, gold is an uptrend. Okay, I've talked about this double bottom for some time now. This is a double bottom, and this is the neckline that has been broken. On Thursday, price finally retested this neckline. Okay, so we are in a bullish environment because this is a high, this is a low, higher high, higher low, higher high. Okay, so we want to buy. Now the only problem is that this candlestick it's kind of like an inside bar. I'm not too convinced that this is a good candlestick pattern yet. So what I would prefer to see is I like to see an engulfing pattern here, and if the risk to reward still makes sense, okay, because we don't want the engulfing pattern to be something like this, and that ends up the take profit is very near. Okay, we want it to be something like this. Okay, hopefully you can close probably maybe even retrace down lower so that we can get a good risk to reward. Okay, so these are the two key levels. The bias is very clear, it's bullish for this one. Just take note about your risk to reward. Okay, ideally you want to have at least a 1:1.5. You do not want to have anything lesser than that. Now let's go into Euro Pound. Euro Pound was a trade that we tried to long last week, or rather this week, and it just refused to break out. Okay, maybe it's waiting for I don't know, the news. Let's see. Yeah, maybe it's waiting for this news, because we have the pound news, right? And Euro Pound will obviously be affected by this piece of news. So I think it's just waiting for that set of news, and after that it's probably going to break up, because I'm seeing some form of buying pressure. You can see that this three engulfing patterns, or rather these three big extended range candles followed by this candle is kind of like a rally, and then this is a pullback. It's a corrective structure, impulsive structure, and then another corrective. So if you understand price action, I think I have recorded a video about this previously. I think it's called the Elliott wave theory. After impulsive, corrective comes impulsive, comes corrective, comes another round of impulsive. So I expect this to break out, so please do not sell right here. Okay, just wait. If you want to trade, just wait for price to break out, wait for the pullback, and then you can target here. Okay, there's a lot of space, a lot of meat for you to eat for this particular trade setup once price break above this level. But just wait, all right? Please do not trade in here, because otherwise, you know, it's not going to go anywhere, and that it might be very frustrating for you. So lastly, let's talk about pound yen. Pound yen is another one that we wanted to long, but you know, it's pretty tricky. Want to share with you a case study as well. So what happened on Thursday? Let me just explain what happened on Thursday. So this is a swing high. So what happens is that when you have a swing high like that, many people will put their stop losses above here. So this is where their stop losses are. Okay, if you trade like that, there's nothing wrong. It's just how most people trade. So because of that, the market knows that there's a lot of stop loss. It has to go up to trigger these stop losses, and after it triggers a stop loss, then it starts coming back down. Okay, this is how the market always works. It likes to hit people's stop losses, likes to stop you out first, and then after that it goes in the correct direction. Now anyway, this is pulling back now, and I still think that it will go up. Okay, so just be very careful. We want to wait for price to come back down first before it goes back up. I have also drawn this trend line for you. Okay, just take note of this trend line. This trend line is very strong. If price bounce back here, then it will bounce, you know, it will hit into this horizontal level also, and then we can get a very nice low risk entry. Okay, this is a very good setup. I like it because you have the market structure, you have the left shoulder here, you have the head, and you have a potential right shoulder, and you have the confluence of this trend line at the same time. Okay, this is a very strong level, and I definitely want to take this trade if I can see it. Okay, just wait for price to hit here, look for a engulfing pattern or a pin bar, and then you just take the long and just target here. Okay, should be a pretty easy trade, and also a very profitable trade if you know you get in something like this, and your take profit is like that. Okay, the risk to reward is decent. It's 1:2.3. Okay, so that's it for this video. Just summing up, next week we have FOMC, sorry, not FOMC, NFP. Okay, NFP, and it's going to be a week where we expect the market to be more whippy. Okay, so please do not chase the breakout, because these are the kind of weeks where you want to trade fake outs. Okay, so please get your free day trading guide if you have not. Okay, if you have not joined us on Telegram, it's a free public channel, right? The link's in the description. Make sure you join us. It's totally free. We share with you our trades, we run it through with you so that you know exactly what we are trading. Okay, if you have not yet subscribed to this YouTube channel, really appreciate if you can do that, right? Do hit the thumbs up button to support this channel as well. If not, please trade safe, please manage your risk well, and I'll see you in the Telegram channel.